Okay, guys, Sam again. Uh, so what I thought I'd do here is use a different market. We're going to approach it, of course, with the same methodology. But I wanted to show you this one because it's been incredibly technical. It's been just a beautiful market to trade. It's been very, very profitable for anyone trading this methodology. So I wanted to demonstrate that both in terms of historically to show you how profitable this methodology can be, particularly in a market like this where you have algo footprints all over it. But if you were coming to this today and you were looking for a trade, for whatever reason you were looking at Dash, you might be over on Poloniex and looking at what's moving against the dollar and see, well, okay, Dash is up 3%. How's it doing against Bitcoin? Bitcoin, it's up 1%. But as I mentioned previously, because I'm bullish Bitcoin, I'm bearish the dollar, I want to trade Dash against the dollar. So again, to maintain consistency, I would come over to CoinGecko, take a look at where it sits on their and I see it's number 7. So all good here. And I can see that it's starting to base here a little bit. They're all starting to base a little bit. So if I go over to Dash, again, in the interest of demonstrating this through repetition, I want to take you back historically, and then we'll get right up to whether or not there's a current trade that we can take advantage of. So if we were coming to Dash for the first time, here's a daily chart. And I would look at this and say, well, okay, well, clearly we've got some sort of, impulsive structure here. This could be the 1, this is 2, 3, 4. This is an awfully big move here, so likely in just rudimentary Elliott analysis, we know that the third wave is always the strongest wave. That's the impulsive move. And so likely we've got this as some sort of a third wave. So one of the tools that can be helpful, and I've shown this before, is to use the Elliott oscillator. So you can just type Elliott. Let's put the Elliott oscillator on there, which again is nothing more than a 5 and a 34 moving average combination displayed as a histogram. But it's useful to us in determining wave structure because we know that the third wave is always going to be the strongest. So we can see that we've got some sort of a third wave here. So that would suggest that whatever's happening here is not complete because we don't have a fifth wave that's going to be lower in this histogram to give us that divergence based off of a new high and a lower high on the oscillator. So this becomes somewhat unclear here because without the oscillator, you might think 1, 2, 3, 4, 5, the top is in, but that doesn't look like the case. So if we're going to move back in time and look at this and analyze it, we're looking for some place to start our first pull, and just moving to the left here, I can see the most recent swing low is this here. Now this is probably some sort of a news event. I don't know what happened there, but it's the lowest low I've got in this range, so that's a reasonable place to start my pull. So I'm going to pull there to the obvious pull at the high, and lo and behold, what do we see? So it's just amazingly consistent. So from this low to this high, we come right to the 618. And what happens, right? So we rip away from it. We get to the previous high. We can't get through it. We pull back, and then bang, off we go. We get the negative 23.6 almost to the tick. So we know algos are going to take profit there, and the market rips back down. So if we were trading this with, and I try to simulate this so you can see it as though we didn't know what was coming. So at this point, we know that this is some sort of impulsive move, that this at that moment in time, this is the high on the oscillator, so we're assuming that this is the third of some sort. Here's the 4, and we're going up. This likely could be the 5, and that would be the divergence that I was just referencing here that you see because we've got a higher high in price and we've got divergence in the oscillator. So with that being the case at that moment in time, all we really know is that we've got a pivot here that's significant. Algos are referencing it. They're using it. So I would take that off, and at this point, now I'd start to pull from this low. So if I pull from here to here, well, we come down, we test the 50. I'd likely pull from that next because we get a new high. We come down to the 50, we get a reaction, we're back to the 50, and look what happens. Boom, up we go to the 23, negative 23. In fact, we almost get to the 618 before we get this big reaction. What do? Back to the 618. Now, you can make the case that, of course, we're on a daily chart, so we would have been trading this on likely on a different time frame. But I want to show you something here. That remember, it's always a bit of a puzzle to try and find the pivots that the algos are using. So you certainly can make the case that if I pull this off, given that previous low being significant, that you'd have pulled from this. So you'd have pulled from this looking for a buy here at the 50. Let me open this up a little bit. So again, trying to simulate what you would have been seeing. So you've got this previous resistance up here at these swing highs that you could very well anticipate likely to show support in conjunction with the 50. So that very likely that could have been a trade that you took. You stopped below the 618, giving it a little breathing room. You're stopped out. Okay, you stopped out. But you're off to a good start, but now you've had a small loser. Of course, the winner significantly greater than the loser you've taken here. Just visually, you can see that. So now the market has wicked you out, so now you're waiting. So at this point, we'd pull back from here and see if we've got an all the way halfway back. Well, we're extreme here. This is extreme volatility. We've broken the 618, wicked it pretty substantially, so you had a volatility event. You could make the case that we've got a complete 5 here. 1, 2, 3, 4, 5. This is a deeper correction. But now the market starts to take off. So if we're looking at this point in time, if we're not in, we're looking for a way in. So knowing this is a significant low, pull to this high. You missed it. You missed it because if you're pulling from this high, you didn't get enough retracement because this didn't happen yet. I mean, you could make the case that maybe you got that, but likely you've missed this. But interestingly, look where it goes. So at this point, now you continue to pull. So now you've got a swing low. We go to the 50. It holds. Back to the 50. We test again. Still long. Now we get the reaction. Now where are we going? Just shy of the 23. Close enough that you're likely that's profit taking. You can look here. We've got some divergence. So potentially you've got this wave structure that's completing. And we start to correct. We start to correct. Look at that. That's why it can be worthwhile to continually reference the previous pulls because they will come back into play. So you could make the case that on a smaller time frame, you were working off of this low to this high. Clear evidence that you had problems here in the bullish case because of the break of the 618. The 786 holds it, but you can't get a new high. We come to the 618 to the tick, then we get a reaction. And now we're off to the races. Now we're off to the races. Now it's screaming. So at this point, this is the last swing pull we've got. The market's moving, so we're going to pull from this low right to the 50. Boom. Through. Now we're just screaming higher. I mean, take note of that. I mean, almost to the tick. We go all the way up to the negative 100%. That's certainly compensating you well for the 1 or 2 trades where you get stopped out. The winners here are so much substantially greater than the losers that you're doing very well. You're doing very well here. So now we've got new highs we'd be pulling from. Nothing there. Now we're just in a raging monster. Pull up to the high. Now at this point, look, we've got the oscillator at this high here. So we've got a potential for a 1, for a 2, for a 3, some sort of a correction. We come down, we wick the 50, wick it again, but we're holding, and that's where we sit right now. So let's just kind of to continue to make this point. Let's take this down to to an 8-hour and show it to you in real time as we're approaching it right now. So if you were looking at this and you didn't take the time to go look at the daily, you could look at this and say, well, clearly I've got some sort of a, we look here, we've got a 1, then we've got a big 3. Now we're in some sort of a correction here. So we could easily draw this up here. If we go to an account, we could use this low here. There's some sort of a 4. We don't know if it's in yet. And within this, it's waves within waves. We've got that. So this all is starting to look good. It's starting to look like there's a lot of evidence to support the fact that we're in a third and now correcting via the fourth. What's important here? Well, we know that this wave 1 high is significant. We definitely want to pull from the wave 2 low to the high. Where are we now? Remember, the stronger the move, the more likely the 382 is to hold the support. We don't get to the 50. We don't get to it. There's the 8-hour. We know we've got to pay attention as we're correcting. We want to pay attention to what's happening in the opposite direction. That's a good sign that we broke the 618 there, but it wicked it, and we come back down. Let's go down to a smaller time frame. Let's go to the 4-hour. Starting to look pretty reasonable. Let me pull this. We know that the market's correct in 3s when they're moving impulsively. So is this a low? That's the question that we have. Is this a solid low? Is this a solid low? So if I draw this, do we potentially an ABC? That looks encouraging. We get to the 1.618 to the tick here. We get some volatility. We shoot through it, but that looks like we've got a reasonable pivot there. Coming the other way, well, that's not as good, although we've seen the market come down, hit the 786, get through by a few ticks, and then respond. So remember, in a second wave, it's the new trend, the new impulse trying to establish itself. So the fact that that's why you often see the deeper retracement here in the 2. The bulls are trying to push, the bears are trying to push it to break to new lows because they're looking for their negative 23.6 in that target. Bulls are fighting for it, so you're getting testing of the lows. And the bears can't get it through. They can't get it through. So this is a reasonable pivot to work from. So let's go down to the 1-hour. That remains a target if indeed this is a solid low. Well, it's not ideal. It's not ideal. It's not perfect, right? Perfect is elusive in the markets. But we can make the case that we've got a very steep retracement. We've got the correction of that retracement. We've come down here and they can't get to a new. It's similar to what you're seeing in Ethereum and Bitcoin. All of crypto is we've got this nervous market because of news out of Asia. So you've got the bears trying to push it down. They can't get to new lows. They can't get to new lows with any conviction. So coming at it now, well, I can just look at this and see that we're likely just caught in a range. So for the bulls, we can pull from this low. Where are we now? The 50 is held, and we're moving away. For the bears, down to the low. I mean, talk about a fib fight. Right to the 50, they can't get it through on the other side. So right now it becomes a matter of, well, where's your bias? Well, because of the strong wave count structure, our bias is to the upside. Bias to the upside. So is there a trade there? Absolutely. Maybe a little bit late on this time frame. Maybe a little bit late. Maybe you get a slight pullback. But you know you can get into this if you can get a little pullback here to this range. You see, again, because you've got waves within waves, this could be the A, the B. So the ideal trade is down here. There's your first target. You know, depending on how aggressive you want to be, you could keep it a few ticks below the 618. If you want to give it plenty of breathing room, stay below the 786. That gives you a little more than 3 to 1. If we get some of these upside targets, if we really start to move impulsively, well, there's your 1, there's your 2. Minimum on a 2 is the 50. I'd love to catch it a little bit deeper and see a little bit more of a three-wave structure that in that correction. That's the ideal place to catch it, 311. If we come, but you know, if you wait for that, of course, the risk is that you never see it, and then it's just off to the races, and the 2 could be in. But you really aren't going to know until you break through the 618, and take note that on this 50 target up here is just a few ticks beyond the 618. So again, this is what makes it challenging, right? You've got conflicting signals here. You know you're going to hit resistance here at the 618, and because algos that are long here are going to take profit there. We've got the potential to get up to the 618, and then there's the -1. Well, we're going to hit resistance there from that previous high. So you know, there's an example of is it tradable now? Yeah. Are you better to wait for something that's more ideal? That would be my suggestion. Even though you've got the 50, if you're not already long, if you didn't just pull this from your own analysis of what I've shown you so far, if you're not already long, I would wait, because I would want to see more of this. I'd like to see that. That's worth waiting for. Now, you know, we've got a lot of assets with which we can trade. So, you know, my suggestion is you wait for something that's ideal. That's got better risk reward. You're at 4.5 to 1 here. You've got great upside targets, and you're in sync with the longer term trend. So if we pull back now and look at where we might be going, that could be a great spot to be in, looking for that upside target at 480. Right, great upside potential. The market's been trading very technically. Definitely something to keep an eye on. Okay, guys, that's it for now.